Well, if you see Rallis India share prices, it has declined the most and it's one of the worst performing agrochemical company. It has declined nearly 29% year to date, while the other companies have declined in the range of around 20% to 12%. And among the good performers, Bayer Crop to Excel Industries, the gains have been in the range of around 41 to 6%. But Rallis India here is in the bottom of the table with around declines of around 29%. Now, this 29% decline that we have seen in the share price of Rallis India is the biggest or the worst start to the year in the last 17 years. That is since 2006. This is the biggest year-to-date drop that we have seen for Rallis India. So, what are the factors behind this drop? Firstly, is the delayed monsoon this year that has led to slow start to the Kharif season, which is in the most parts of India, and because of which the revenues are expected to be a bit lower for the company. Along with this, though the company has taken price hikes, there is some impact on the volumes that is expected to come in, which will again dampen the revenue for the company in the first quarter. Now, as I said, the company has taken some price hikes in the range of around 4 to 5%, but given the steep inflation in the key raw material prices, the company's operating margins are expected to remain under pressure despite the price hike. Along with this, the bottom line is also expected to remain under pressure, and even the management has sounded cautious on this front. Now, if you see in the last quarter that the company financial reported, that was the fourth quarter of FY20, the company reported a loss, while in the last 3 quarters of FY22 also the company's profits have been continuously declining, which shows that the bottom line has been continuously under pressure for Rallis India. Of late, if you see, we have seen some cool off in the raw material prices, but the company is saying that they have actually taken up a lot of inventories of raw material and finished goods which are already high priced, because of which the margins are expected to continue to remain under pressure. So high inventory is also another issue for Rallis India. And lastly, if you see, the company has been introducing new products in the market, but none of them has been a blockbuster for the company. Now, if you see, the new product contribution to the total revenue of the company is low at around 11%, and that is one of the reason why the share prices has been falling for Rallis India.